Have you ever considered how a single exchange, far away from your home, could impact the value of XRP in your wallet overnight? It might seem unlikely, but in the world of digital assets, distance means little when markets are so deeply interconnected. The reality is, what happens in one corner of the globe can send shockwaves through your portfolio before you even wake up. Recent events in South Korea have shown this is more relevant than ever. The country's vibrant crypto scene is often a bellwether for global trends, and what unfolded there recently has caught the attention of investors worldwide. At XRP Insights, we track global digital asset trends, and right now, South Korea's Upbit exchange is in the spotlight. Upbit isn't just another trading platform, it's a major player, often setting the pace for XRP trading volumes and price action in Asia. A significant event there has sent ripples through the XRP ecosystem. The effects weren't limited to South Korea, they reverberated across continents, impacting sentiment and liquidity everywhere XRP is traded. This isn't just a local issue, it's a global signal. When a market as influential as South Korea's moves, the rest of the world pays attention, and often follows suit. The recent liquidity crunch on Upbit wasn't a technical glitch, it was a human-driven surge in demand. Retail investors, driven by news and speculation, created a sudden imbalance that even the most robust systems struggled to handle. Understanding this event is crucial for every XRP holder. It's not just about price swings, it's about recognizing how quickly market conditions can change, and how vulnerable even established assets can be to sudden shocks. It's a live case study in how market dynamics can shift instantly, revealing hidden pressures that shape XRP's global price. These moments expose the underlying forces that most investors rarely see, but that ultimately determine the value of their holdings. The incident is a wake-up call about the power of retail markets, especially in crypto-savvy nations like South Korea. When millions of individuals act at once, their collective influence can move markets in ways that even institutional players can't always predict. A liquidity squeeze in one part of the world can create opportunities and alter trading behavior globally. Traders everywhere must adapt, sometimes within minutes, to new realities shaped by events thousands of miles away. The price you see on your exchange is part of a worldwide negotiation. Every trade, every order, is influenced by a complex web of global activity, sentiment, and supply and demand. When a market like South Korea's experiences a shock, it affects XRP's price, availability, and sentiment everywhere. As an XRP holder, staying informed about these global dynamics isn't just smart, it's essential for protecting and growing your investment. It happened in a flash. One moment, everything was running smoothly. The next, the entire market was holding its breath. On what started as a typical trading day, Upbit, South Korea's leading crypto exchange and a major player in the global market, suddenly suspended XRP withdrawals without warning. This wasn't just a minor technical hiccup, it was a blaring siren in the night, a signal that something extraordinary was unfolding. The demand for XRP was so intense, so relentless, that Upbit's hot wallets, their easily accessible funds, were drained at a pace no one anticipated. The exchange simply couldn't keep up with the tidal wave of withdrawal requests. Imagine a classic bank run, but instead of people lining up for cash, it was a digital stampede, an insatiable appetite to buy and move XRP, all happening at lightning speed. Upbit had the assets, but they were locked away in cold storage, not instantly available. The right funds simply weren't in the right place at the right time, creating a bottleneck that no one could ignore. This was a textbook liquidity event, a dramatic example of what happens when supply and demand fall completely out of sync, sending shockwaves through the market. For Upbit, the only solution was to move more XRP from secure cold storage into hot wallets, a process that takes time and precision, especially when the world is watching. During this critical pause, speculation ran wild. Traders, investors, and analysts all tried to predict what would happen next as pressure built with every passing minute. The temporary suspension of withdrawals wasn't just a local event, it was a market signal that reverberated across continents, sparking conversations and concern in trading rooms worldwide. It confirmed what many suspected. The buying pressure in South Korea was a roaring fire, fueling a surge that could not be ignored by the global crypto community. For XRP holders everywhere, this was a moment to pay close attention, a reminder that in crypto, fortunes can shift in an instant. The forces behind this tremor were powerful enough to move not just the Korean market, but to send ripples through the entire global financial system. This event was a wake-up call, highlighting the immense influence of retail demand in shaping global price action, and showing just how quickly the balance of power can shift in the world of crypto. To understand why XRP prices are surging in South Korea, we need to look beyond the headlines and dig into a unique market phenomenon. This phenomenon is known as the Kimchi Premium, a term that's become famous among crypto traders worldwide. The Kimchi Premium refers to the price difference for cryptocurrencies, like XRP, between South Korean exchanges and the rest of the world. In practice, this means that digital assets often trade at a noticeably higher price in Korea, fueled by intense local demand and strict capital controls that make it hard to move money in and out of the country. This isn't a glitch or a temporary blip, it's a persistent market dynamic that's shaped by Korea's unique financial environment. The Kimchi Premium is driven by a combination of high local enthusiasm for crypto, regulatory barriers that limit easy arbitrage, and a culture that's quick to embrace new financial trends. These factors create friction, allowing Korean prices to break away from global rates, sometimes by double-digit percentages. When the market heats up, the premium can spike dramatically, reflecting a surge of local excitement and speculative buying. A widening Kimchi Premium is a clear signal that Korean demand is outpacing global interest, often leading to even more attention from traders and media. This premium can create a powerful feedback loop, where rising prices attract more buyers, which in turn pushes prices even higher, amplifying the effect. The recent Upbit liquidity event was a direct result of this dynamic reaching an extreme, with local exchanges struggling to keep up with demand. For anyone watching the crypto markets, understanding the Kimchi Premium is essential. It acts as a real-time barometer for retail sentiment and risk appetite in one of the world's most influential crypto hubs. Ultimately, the Kimchi Premium shows how local demand in South Korea can ripple out, influencing global price movements and shaping the narrative of the entire crypto market. Human psychology, especially the fear of missing out, FOMO, moves markets. The events in South Korea were a textbook case of FOMO. As XRP prices climbed and the Kimchi Premium widened, traders rushed in. This created a self-reinforcing cycle. Initial buying pushed prices up, attracting more attention and buyers. It's like a snowball gathering momentum. Social media amplified the excitement, turning price movements into cultural events. The Upbit liquidity crunch added fuel to the fire, signaling high demand. The perception of scarcity made XRP seem more valuable. This FOMO isn't contained by borders. Global traders watch the Kimchi Premium as an indicator. Seeing a buying frenzy in Korea, they anticipate it could spill over globally. A localized demand surge amplified by FOMO ignites a global fire, pushing XRP prices up everywhere. A demand surge in South Korea directly impacts global XRP prices. The Kimchi Premium creates arbitrage opportunities for traders. Sophisticated traders buy XRP globally and sell it in Korea for a premium. This arbitrage transmits Korean buying pressure worldwide. Large-scale buying on global exchanges causes XRP prices to rise. It's like a vacuum in Seoul pulling XRP supply from everywhere. This creates a ripple effect. Global traders react to rising prices. News of the Upbit event spreads, becoming a catalyst. Headlines about soaring prices and halted withdrawals reinforce bullish sentiment. A local liquidity event becomes a global news story, shifting trader psychology. A regional phenomenon triggers a global shockwave, affecting XRP prices worldwide. To grasp the XRP event's magnitude, consider Upbit's scale. It's a titan in South Korea, commanding a massive share of crypto trading. Upbit's actions carry immense weight, like a marketplace itself. A shift in sentiment on Upbit represents a significant portion of the market. This concentration amplifies market movements. A surge in buying isn't diffused, it's focused on Upbit. This is why a liquidity crunch happened quickly. Upbit's dominance gives it gravitational pull on the XRP market. Its price discovery process is influential, setting new targets for global prices. The withdrawal halt magnified this effect, showing demand strain. The Upbit incident illustrates the influence of major exchanges on global markets. For XRP holders, knowledge is true power. Events in South Korea offer actionable intelligence for investors. Monitoring markets like Korea provides early insights into market movements. Watching the Kimchi Premium is like seeing smoke on the horizon. It's a leading indicator of building buying pressure. This allows you to anticipate trends, not just react. Add key data points to your monitoring dashboard for better results. Track the XRP-KRW pair on Upbit and the Kimchi Premium. When it surges, a retail-driven rally is underway. This approach is part of a global strategy. Staying informed helps navigate crypto volatility and positions you as a proactive XRP holder.